The odds are, like, normally this time of year, coffee rallies are generally sold into. We get weather scares here and there, we get fundamental scares here and there. The market rallies, and then it normally sells off. From February through July, we normally get lower highs. My personal opinion is, I think we could very easily see $3.90, $4 on this little run that we're having. I think there's going to be a pretty good ceiling there. If something surprises the market, we might actually see 420, 430, which would retest the highs. But I would say I would refer to that as some sort of a last hurrah rally before we start heading lower. My target, you probably don't want to hear this, but my target's 220 to 250 on the downside.
If you're looking for a free way to support the work we do, bringing you conversations with our amazing guests on the Daily Coffee Pro podcast by Map It Forward, please subscribe, follow, and rate us wherever you listen to the podcast. It really helps us out. It's also a huge help if you share this episode and our social media content with your coffee friends. For links, check the show notes. Welcome to the Daily Coffee Pro by Map It Forward, friends. I'm your host, Lee Safar, and we are fortunate to have Carley Garner from DeCarley Trading on the podcast for episode 2 of a fantastic 5-part series where we get to speak to Carley about all the things that we want to understand about coffee prices and what's going on, etc., etc. We're talking about tariffs and coffee prices in this series, and in this episode, we're going to talk about how permanent these high prices are. In a previous series, Carley, with Emma Haynes, a coffee professional in the UK, who specialises in green coffee trading, we had this conversation, and she said to me, I don't know who owns the exchange and like how they make their money, etc., etc. And I just wanted to ask you, who owns the exchange?
The
Is it
ICE
privately?
exchange?
Yeah, is it
I
publicly or
think
privately?
yes, I should know this. I think it's New York Stock Exchange actually owned
Okay,
ICE.
all
They're
right.
both the same entity, just different umbrellas. Um, I hate to encourage a monopoly, but I really wish the CME would buy the ICE exchange. I think it would be in everybody's best interest, but nobody listens to me, and I think they probably can't because of the idea that that would leave the U.S. with
It would have
one
monopoly.
single exchange.
Right. Okay. So they, I guess, make their money off each trade. They make some money off each trade, and this $145 a month that they collect to have access to the data. Is that it?
Yeah. So the data fees are 150, 140 plus New York sales tax,
Okay.
so 140
Right.
a month. And most
God
people
bless.
opt not to pay for it because it's
Right.
just silly. Professional traders do, I do, but most individuals
Yeah.
don't. Most trading platforms will give them live data. The brokerages that offer delayed. The brokerages that offer delayed data actually still pay the exchange. I don't know how much, but probably several $1,000s a month just to have the privilege to offer delayed data. So they get money that
Wow.
way. They do make money on the transactions. I don't know exactly how much. I'm totally guessing, but it's not as much as you. It's like cents, not dollars.
Okay.
So no, I take it back. They also have exchange fees that. So for example, if my client buys or sells a coffee future, they pay me a commission, and then they
Yep.
also pay a set of fees. Part of those fees go to the exchange. In addition to that, there's a little tiny fee that they charge the clearing firm.
Uh-huh.
So they probably do actually, for most retail traders, they probably do make $3 or $4 per round turn, just to give you an idea on a coffee
Wow.
future. I mean, this is not exact, so don't like,
Yeah.
but it's in that ballpark, probably $3 or $4 a trade. So the crazy thing is, I don't know if you've shopped around for futures brokers. Like, there's different ranges of futures brokers. There's super discount online trade brokerages that offer just like a platform and you're on your own and good luck. And then there's like us, that's a boutique where we give people a platform and they trade on their own, but we charge them a few extra bucks so that we can answer their questions and make sure they're not jumping into, flaming hot fire coals.
Right.
So there's like two different services. But what I'm trying to say is some of the discount brokerages actually charge less in commission than the exchange makes on the trading fees. So it's really kind of crazy because the broker is the one doing all the work, taking the phone calls, taking the emails, taking all the risk, and the exchange is just sitting there collecting money. So they do.
To be very clear on something you just said about, have I ever shopped around for futures brokers. If I was ever trading futures, there is only one firm that I would use, and it's yours.
Well,
To
thank
be
you. I
very
appreciate
clear
that.
on that.
Thank
And there is no financial arrangement between Carly and I or anything like that. This woman I would trust handling my money with anything to do with this stuff. So that's why I'm
Thank
saying
you.
that. You're welcome. And I would encourage anybody. I send all my clients to have a conversation with you and if they're considering doing that. So yeah, just to be very clear. All right. So when it comes to this question, how permanent are high prices? Coffee farmers and buyers and sellers alike in the cash market in coffee are very concerned about this question because they don't know, have we peaked? Is this long term? Is this going to crash? What are the things that are going to cause that to happen? I know that there's a lot of questions there. But in your mind, have we hit a new kind of era in coffee where, $3 is the new floor?
I don't think so. I
Okay.
could be wrong, but I've been following I'm not talking about just coffee. It's not just coffee. It's all commodities. They
Mm-hmm.
do the same supply demand. Everybody thinks it's going to the moon, on the highs, and then it doesn't. High prices cure high prices. I know there in coffee, there's a shortage. I'll point out anybody that's followed orange juice had kind of a similar pattern in coffee where it went ballistic a couple of years ago. And it actually hovered at pretty high levels, like historically high levels. The story was Florida's orange groves have pretty much been cleaned out, and we just simply didn't have enough oranges. And next thing you know, about a month ago, maybe a month and a half ago, it started selling off. We shaved off 65% of the price in a month and a half. So I'm not saying
Wow.
that happens to coffee, but I'm just saying even in the most desperate fundamental stories, those things happen and they happen over and over and over. So in the case of coffee, I don't know what it's going to look like next year
Mm-hmm.
or years from now. I have no idea. But I can say in the next 6 months, I know what the probabilities are.
Mm-hmm.
The odds are like normally this time of year, coffee rallies are generally sold into. We get weather scares here and there. We get fundamental scares here and there. The market rallies, and then it normally sells off. From February through July, we normally get lower highs. My personal opinion is I think we could very easily see $3.90, $4 on this little run that we're having. I think there's going to be a pretty good ceiling there. If something surprises the market, we might actually see 420, 430, which would retest the highs. But I would say I would refer to that as some sort of a last hurrah rally before we start heading lower. My target, you probably don't want to hear this, but my target's 220 to 250 on the downside this year.
This year?
Yeah, this year.
Around when this year, do you think? But I want to preface this by saying, folks, this is not financial advice.
No.
This is not, this whole series, disclaimer, this is not financial advice. If you want to do anything with futures contracts, find a professional, contact DeCarley Trading. Please go ahead.
100%. And I will also say, I don't have a crystal ball. All I'm doing is looking at what I've seen in the past with coffee and then also other commodities, looking at the chart, look at the seasonality.
Mm-hmm.
The thing that makes me think, and I know there's a fundamental story. I know that's your area. But there's a few things that always happen to commodity rallies. Eventually the price gets high and consumers change their behavior. They look for substitutes, or instead of having 2 cups a day, they have 1 cup a day, or whatever commodity is. It always happens. We haven't really seen a whole lot of that yet, but what if we go into recession? We will. Yeah. I'm old enough to remember crude oil at $150 a barrel. Literally the entire world thought we were out of crude oil. Every time you turn on the TV, they talked about peak oil. We're out of oil. The market the economy went into the recession, and crude oil went from 150 to 30 and has never gotten anywhere near 150. So these are just the things that happen. We don't know what the future holds for coffee. All I know is we're at a high price. And so a recession or even just a softening can change that in the blink.
And it seems to be like I watched Coffee Bros like almost meme stock coffee, the same way they had done with GameStop on all their blogs and podcasts. Does that sound
Yeah.
weird? But did you see the same thing?
Oh, for sure. Yeah. And that's that excess money that's just sloshing around. People, it's crazy. I grew up at a time where people built things and created
Yeah.
things and and now
We're the
it's
same
total
age. We
insanity.
both know that
Yeah.
that
It's too old.
the,
I don't understand it. It's wild to me, but it's actually a true reality. And while I'm a really big fan of electronic markets and people having
mm,
access to trading accounts on their phones, and the barrier to entrance in commodities is so much lower than it used to be. You
mm.
used to have they used to require 50 to 100,000. You used to have all this paperwork,
Wow.
and now it's so easy to open an account. You can open with 2,000 and you can do it on your phone. And so it's nice, but it also adds to volatility because what happens is our society is such a group thinking
Mm.
machine. Everybody gets the same idea, jumps on the same two or three markets, and you see the result. And then it never holds, right? It just explodes and it melts down. So we're just seeing this over and over and over in commodities and stocks. And I wish it would end. I'm tired, but maybe this is the new reality. I don't know.
it, it doesn't feel like tariffs have made this head in the direction where everything's getting simplified. But we're going to talk about tariffs in the next episode. So we'll leave it to that. But what I want to ask here is like, how do people make decisions? Producers and buyers, like they're not speculators. So how do they approach making decisions in a market like this?
Okay, so that's a great question. So I don't know if I made myself clear, but uh, anything that I'm doing is it's a guess. Nobody knows
Mm.
where he's going. Literally nobody does. If they tell you they know, they're lying. I'm telling you
Hmm.
that. No one knows. But what you do know is what is your break even point? What can you make money? What price can you make money? What you know what I mean? You know those things for your business. You have to protect that as if with all costs. So all you can do is make decisions based on what's going to make or break you and your business.
Hmm.
Assume that the worst is going to happen, but hope for the best. That's all I can say. So if you're somebody that if you're a coffee buyer, don't just say Carley said it's going to 250. I'm gonna just wait because I could be wrong, and maybe we go to 450 instead.
Mm.
Prepare yourself for those things. But what I can't say is markets, even if I'm dead wrong and coffee goes back into the mid fours and stays there,
Hmm.
markets give you opportunities to get your hedges on or position yourself. So for example, if you're someone that doesn't have access to hedging
Hmm.
products or whatever it is, maybe that means as a producer, when prices are at $4, sell everything you can, lock in your
Yep.
prices, sell forward contracts. And if you're a buyer, build up your inventory, buy forward contracts or whatever it is that you need to do to get your inventory at lower prices. So react to the price and expect it to get worse, and then, like I said, hope for the best.
Yeah, it's one of those things right now because I'll talk about this more in a future episode in this series. We're starting to see negative impacts of high prices for coffee producers, for sellers, because it's a kind of regret because the supply is so constrained now, and they've got generational debt as opposed to generational wealth. That generational wealth used to be a thing in coffee, and it's not anymore. And this was supposed to be the year that a lot of coffee farmers, with the prices the way that they are, got out of that cycle. And then they didn't have enough coffee to take advantage of it, but they had invested so much in this crop because that was what was going to happen. And now we're seeing, do you remember the first conversation that we had when we were talking about suicides
Lately.
in coffee because the price
Oh,
was
yes,
so
yes,
low?
yes.
Remember?
Uh-huh.
We're back there.
Oh, geez.
Yeah. And we're back there because farmers are tapped out. A lot of them are tapped out. They don't see a way out of this. So this is, strangely, I didn't think that high prices would be a reason. This is both in cacao and in coffee. But I'm hearing more and more every single day of coffee farmers that are unfortunately in that situation. and they don't know what to do. They don't know how to, like, they don't want to be that next consequence of this volatility. So, yeah.
The one thing I know for sure is no matter what side of commodities you're on, broker, grower, buyer, it's always going to be very tough business. There is no easy money in commodities. It's literally the worst business. I question every day I wake up and wonder why I do this.
Mm.
I mean, I'm not serious. I actually love what I do, but it's not easy. And there's never, it's not people, a lot of people try to look for black and white answers. They want a mathematical equation to tell them what that is. The reality is commodities it's an art, not a science. Economics is an art, not a science. So it's not, a math equation is not going to work for you because there's humans determining prices. I will say that if producers are that dire, we are probably at extreme, right? Remember last time people were suicidal in the 90s?
Yep, it was very low.
That was the bottom. We're probably closer to a top than bottom. So I would use that as an indicator. That's a really awful indicator, but that's just the nature of the commodity beast, which is a very sadistic beast, I will say.
You know, it seems like what is becoming apparent for a lot of people is that commodities is all about uncertainty and trying to predict the right side of that uncertainty and make it work to your favor. Whether you're the person that's growing the commodity or producing the commodity or the seller, it feels a little bit like uncertainty is the theme. And if you don't have the stomach for that, this is not the game to be in.
That is absolutely 100% true. Well said.
Okay. So
there's really no way to get around it. I wish there was, but there really isn't. I mean, hedging is a tool, but like you said, not everybody has that. But you can, for example, when I had, so I work with some, well, I'm trying to think of a good example that's not going to offend anybody, but you don't have to. Okay, let me put it this way. So when corn was around $8 and farmers refused to sell because in their mind, their growing costs were a lot higher. Fertilizer was expensive, land was more expensive, inflation, all these things were going up. So they weren't making a ton of money either, but they opted not to sell because instead of making a little bit of money, they wanted to make a whole lot of money. And that's really the worst mindset you could have in this type of business. If you can lock in any type of profit, take on the complete opposite side. I have one farmer that's a client and he never tries to speculate on the price. Like if you're producing something and you're not hedging, you're actually cash market speculating. It's just like you said, you don't know what the price is going to go. You're hoping it goes up, but you just keep growing and growing and growing and hope someday you make money. Well, one of my clients literally immediately hedges every single bushel of corn that he produces.
Oh, wow.
So if corn goes to $8, he's sitting on massive paper losses and he just keeps paying the margin and holding it. But because he knows in the big scheme of things, if he sells $4.50 corn every single year, no matter what corn does, goes up or down, he makes money. So there's different ways to approach it. Not everybody has the guts or the money to do something like that extreme, but somewhere in the middle is probably appropriate.
Yeah, it sounds, again, uncertainty is the name of the game, and that's where a lot of the resentment comes from in this whole thing. And a year like 2025 heightens all of that and really brings that to the forefront of the conversation, whether it's in the cash market or in the futures market. So we're going to talk next about tariffs, folks. So join us for the next episode. This is where things start to get even juicier than... Is juicy the right word? I don't know. Anyway, join us for that. Peace, love, and peanut butter. Have an amazing rest of your day. I really hope you enjoyed this episode, friends. Please don't forget to show us some love by subscribing, liking, commenting, and most of all, sharing this podcast with your friends. Check the show notes for links, including our sponsors and our Patreon. And stay tuned for more great conversations on the Daily Coffee Pro by Map It Forward.